The American economy was hit by a 100-year economic storm in February 2020, when the COVID-19 pandemic caused what economists term a sudden stop of the economy, a shock that ignites a chain reaction of events. While the American economy has suffered many economic crises over the decades, like the 2008 global financial crisis, a sudden stop is a particular type of crisis. It's when the economy partially shuts down. The last sudden stop of the American economy was in July 1914, at the start of World War I. To give you perspective on the bear market and economic downturn we're all living through now, let's for a minute look at the sudden stop of the American economy of 1914. On July 28, 1914, when Austria-Hungary declared war on Serbia, it was clear that Europe's mightiest military powers would be at war with each other. The unthinkable had occurred. Britain, France, and Russia were aligned on one side against Germany, Austria-Hungary, and Italy. On the morning of July 31, 1914, just 3 days after the formal declaration of war by Emperor Franz Joseph of Austria-Hungary, the New York Stock Exchange failed to open. The exchange would remain shuttered until December 14th. To this day, this remains the longest stoppage of trading on Wall Street. The 4-month-long closure reflected a nation suddenly fearful of the new reality. Unexpectedly, normal everyday economic activity came to a halt. The federal government stepped in quickly, enacting the Aldrich-Vreeland Act, which injected $361 million in emergency stimulus into the economy. The stimulus rescued the economy from a total collapse, but would help fuel the beginning of a vicious inflation from 1916 through 1920, which led to restrictive Fed policy like we're experiencing today. A very similar chain reaction of economic crises that followed the sudden stop of 1914 was triggered in February 2020 when the COVID-19 pandemic struck. If you're interested in learning more about how the period from 1914 to 1920 parallels with current investment conditions, please let us know.